please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Japanese index that's opened really after a long vacation, and it's opened up with a gain of close to around 2%.
Idea Cellular is looking at raising over $500 million is what we gather.
GST, I believe, has also had a positive effect because we're seeing productivity of vehicles going up.
24 points higher on the Nifty, between 24 and 25, as Sensex is up about 112.
Once the earnings actually catch up, you will find a normalization of the PE ratio over the last 15-year average.
Those who depend on wages, which is the poorer people in rural India, there the wage rate seems to have risen even in real terms over the last 1 year.
Government should give more allocation, more schemes where maximum people in rural India can be involved.
This will be part of the Government of India's total debt, but it's not going to impact the fiscal deficit because these are going to be offline. So 80,000 crores worth of first tranche PSB recap bonds.
The market is up 30 points. It's a good-looking screen. It was not so a little earlier in the day, but it is now.
Well, that's the picture. Again, the second half seems to be belonging to the bulls. This is closing bell. That's the day so far. And the picture right now is looking fairly steady. Even better if you're looking at the mid-cap index. I'm Surabhi Upadhyay. And joining me after quite a gap is Sonia Shenoy. Sonia, good to have you on Closing Bell.
Well, thank you, Surabhi. So we're missing Anuj right today. But nevertheless, I think we'll make up for his loss, at least for today. It's been a great day for the bulls, as you said. And finally, it's getting to the 10,500 mark. But that is the key resistance zone, right? That we just refuse to conquer. So let's see how the rest of the day goes. For now, things looking good. It's a pretty sunny afternoon on Dalal Street, you'd have to say. The market is doing quite well. The Sensex is up more than 130 points. And if you had put your money in two spaces, PSU banks or steel stocks, you would have made a lot of money today. So Surabhi was just telling you about how GSPL is surging in trade, 14% higher. PSU banks like UCO, Dana, etc., all looking PNB, IDBI, all looking very good, up about 5 to 10 odd %. That's Uttam Value Steel, a penny stock there, EBITDA loss by the company. But the CNBC TV18 news break has been confirmed. Idea Cellular spikes after the board has approved raising up to 3,250 crores on a preferential basis. Nisha, who broke that story, joins in now. Nisha, congratulations. And you do have more details on what the fundraising from Idea could entail.
That's right, Sonia. I'll take it in two parts. First to the news and then some bit of analysis and linking it to the mega merger with Vodafone India as well. So the first part is the big news, mega fundraising plan, 6,720 odd crore rupees. That Idea is set to really raise in the next, say about 4 months or so. This entire transaction could be completed as the estimates have it from inside Idea Cellular. So that has to be completed before the Vodafone India merger happens, and the time slotted for that is the first half of this calendar year. Now, they are in true tranches, 3,250 odd crore rupees, which means 4.8% stake through preferential allotment of shares to other Aditya Birla Group companies. So, by way of this, at 99 rupees per share, Aditya Birla Group will be increasing its stake in Idea Cellular, which is set to merge with Vodafone India, and will be upping it to 47.2% from about 42 odd % right now. So 4.8% stake is being bought over by Idea Cellular. The second tranche is 3,500 odd crore rupees, for which the shareholders approval will also have to be taken. But the important point to note over here is that as per the merger agreement, Idea promoters were supposed to buy 4.9% stake from Vodafone India to up their stake in the entire merged entity to 26%. Whether or not that will happen, is that required, is the big question, because that transfer or that ramp up in the stake has already happened with this preferential allotment. So that's an important point to note here, and this money is also coming into the company. So by way of that, the promoters would have thought that let's do it through preferential allotment rather than buying that stake from Vodafone India. But we do not know whether that transaction will still have to go through.
Okay, all right, Nisha, thanks very much for that. That's Idea in the news, raising money out there. By the way, there's so much moving in the market. Take a look at some more names that are now coming up on the screen. Titan is, of course, sparkling away. It's had solid gains today, 4% up on a big stock. Day's high pretty much on the counter, as we can see the wave of buying. We were discussing metals anyway. SAIL is increasing its gains to about 4.5% now. Stocks like NCC are again coming to the top of the screen. PI Industries is a big mid-cap flare out there. But the other pocket of the market, as Sonia was just mentioning, that it's metals, and the other pocket of the market where, there's a lot of excitement is PSU banks. And that's our newsmaker of the day. The Finance Ministry has sought the Parliament's approval for 80,000 crore rupees worth of those recap bonds. How is this going to work? Who needs how much money? Abhishek Kothari is here with the analysis. Abhishek, fill us in.
Well, Surbi, as you have rightly mentioned, that Finance Ministry has seek parliamentary nod for an approval of rupees 80,000 crore of recap bonds for PSU banks. Now, Finance Ministry has also mentioned that these recap bonds will not lead to additional outflow of cash. So, this is to meet the Basel III requirement of banks. So let us just highlight what is Basel III requirement. As per Basel III requirement, Tier 1 ratio of all the banks should be at 9.5% by March 2019. And that is broken up into two parts. One is CET1, that is Common Equity Tier ratio of 7% and counter-cyclical buffer ratio of 2.5%. So let's see where the PSU banks actually stand up right now. 10 PSU banks have their Tier 1 ratio below 9%. Now 11 of PSU banks are under prompt corrective actions that limits them from capital raising from other sources except from capital market. So who needs the capital most is the biggest question. Let's look at where the Tier 1 ratio of these PSU banks are right now and where they meet up by FY19 in terms of Basel III requirement. Central Bank of India, UCO Bank, IOB, Oriental Bank, Corporation Bank are some of the banks who needs at least 22% or 25% additional capital. Now, this capital requirement may be higher if they continue to make higher provisions in their balance sheet, and therefore the outflow or the net losses can be higher and capital requirement more. So, key concern is that with aging of NPAs, the provision requirement will be higher. So, banks have their gross NPA and which slippages wherein they provide immediately 15% as and when that NPA ages, that is it moves to 1 year, 2 year, 3 year bucket, the provision requirement is higher. So based on that, higher provision can lead to higher capital requirement. Let's just have a look with gross NPA of banks who are 15% and above. You'll see 9 banks names coming up, and remember that all these 9 banks are under prompt corrective action of RBI. So that limits them from operational expansion. As you can see in the next slide, the 11 PSU banks are under PCA and they cannot expand operationally, that is branches or employees, and they need to curtail and improve their balance sheet, that is the gross NPA ratios. Back to you.
Okay, those are some very important points that you threw up. Thanks so much for that, Abhishek. Let's toss this question to our experts. Prakash, I want to come to you first. We all know that the government is doing a lot to strengthen the balance sheet of these banks, talking about these recap bonds, etc. Yeah. But the confidence level in PSU banks for investors is still very, very low. Absolutely. Do you think long-term investors should take a look here, or would you completely stay away?
No, I think in the long run, it could be healthy for the sector and for some of these banks, but the pain is still not over. So if any upside comes through because of these recap execution triggers, so whatever Abhishek outlined and whatever the government is trying to do has already been on the cards. It's just that the execution has started, the implementation has started. And I think that's an opportunity to get out. Okay. You get out of PSU banks wholeheartedly. Don't even
have made money.
If you exactly, some of the investors who have actually made money more so in the last couple of months and not the whole 6-8 months prior to that, should actually be, thankfully getting out of it and then looking at some of these largest PSU banks. And when I say there are just a couple of them that come to mind, SBI is one, BOB is another. You would push PNB in if you want to, but otherwise don't touch any of these PSU banks till the entire system cleanses itself of so many of these ills. And remember, there are two parallel efforts going on. One is the recap part, which the government is trying to put capital through and all. And the other is the cleaning up for the NCLT effort. So all of that has to converge, and then they'll be in a position to start afresh. So till then, it's a stay away.
Okay, actually, it's pretty evident in the way the prices have moved, right? So if you take a look at a 1 year of a BOB or a PNB, any big bank, they're still a good distance away from the original recap day high, when we had those dramatic once-in-a-lifetime kind of moves come through. So it's still a long distance. And that's the question, Mr. Tulsian. If someone bought in around that time, the peak of euphoria, they'd be extremely disappointed even today. What would be the advice now on the larger PSU names? Is there merit in looking at them fresh?
See, Surabhi, when there was euphoria in the September end series, I think last 2 days of the expiry, I cautioned that there is no point in buying these stocks. But now if you really take a call on the larger PSU banks, maybe like PNB, Canara Bank, or maybe Bank of Baroda, Bank of India. In fact, I have been, keeping positive view for the simple reason that there are 4 positive news flows lined up. One is recapitalization bond that is seen happening. Second will be the NCLT resolutions, which I have been repeatedly saying that I won't be surprised to see the part of the provision. I'm not saying that major portion will get reversed, part of the provision, because what is happening now, market is taking the gross interest, because whenever the creditors sit and lenders sit with the prospective buyer to settle, they calculate the interest till this date, and that amount gets reported in the media that they have taken a haircut of 50, 60, 70%, while the interest income has not been booked by the bankers. The moment it has become NPA. Number 2. Number 3, if you really see the situation going forward, I think it will be the consolidation of the smaller banks with the larger banks also, which will also be giving the advantage to this bigger player. And lastly, it will be the autonomy being given to the PSU banks for going for the credit growth. And in fact, if you really see the kind of dramatic turnaround which has been happening for the stress assets, you see practically there are buyers for all kind of assets. Take any of the not for only of the steel accounts, but maybe in many of the other textile, infra, or maybe the telecom kind of thing. So I think all the positive news are seen lined up now for the PSU bank from here on. In fact, whenever the stock is seen or the sector is seen in the dump, you never like to buy them. The case in point was steel sector. When we started giving a buy call about 1 year back, nobody was liking the steel stocks at that point of time, which has already risen by about 100 to 300% in this last 1 year. I'm not talking the frontliner ones. So we are keeping the positive bias on the PSU banks going forward, and largely on the larger ones. And if you want to take this call on the smaller ones, maybe one has to be select, like maybe Syndicate Bank or Union Bank, or based on the pure performance having posted by them. So I'm not keeping the negative stance, but yes, if you want to have the what you call moderate kind of returns, which won't be less than 15% in next 6 to 8 months, then people can definitely look to buy PSU banks from here on.
Okay, well, Mr. Tulsian, we're just going to come back to you to take up some of the Twitter queries that have come in on social media. Piyush has about 55 shares of Automotive Axles at 980 rupees, and the stock is currently at 1650. So congratulations, Piyush, you're making quite a bit of money here. He wants to know the long-term view on the stock and whether he should sell the stock and buy Eicher Motors instead. Mr. Tulsian, this is a very interesting debate. Both companies doing exceptionally well. Stock prices have been multi-baggers. You think he should book his profits and move out, or should he stick with this?
See, if you take a call on Auto Excel, it's an auto ancillary company, and we have been keeping extremely positive view on auto ancillary. So I would prefer that if someone wants to shift from auto ancillary to auto ancillary, that will be a better shift instead of going to an automaker. I'm not saying that Eicher Motor is not a good stock. So is Auto Excel, Automotive Excel going forward from here. So I'll advise him not to shift from Automotive Excel, either choose some auto ancillary, which can be either Harita Sitting or Banco products, if I need to choose two, and or instead of that, he can remain invested in Automotive Excel also, instead of shifting to Eicher Motor from here.
Okay, so stay put. Otherwise, one option Mr. Tulsian has given you. You've got a great ride, so just keep riding. That seems to be the advice. Okay, the next question is from Prashant, who has 100 shares of Amara Raja batteries. Price is 783. He wants to know whether he should hold on, whether he'll make more money, or if it's advisable to perhaps move on to something else. Making a little bit of money, Ashwini, but what's your advice?
So it's crossed its 200-day moving average after a long time. So maybe he can hold on and look to get probably 950, because a stop around 810 should work. The stock just seems to have bottomed out, so possibly a few good quarters would lead the stock to go to up to 950.
Okay, well, that's Samara Raja for you. Next up, we have a query that's coming from Vijay. Hi, Vijay. Vijay wants to know if Jubilant Foodworks is a good buy at the current price level. Now, if I'm not wrong, Jubilant Foodworks has actually hit a new 52-week high today. If you can just get that stock up for you. It's had a fabulous run. Look at that, 111% higher in the last 12 months. Ashwini, you've taught this to us that if a stock rises 111%, it doesn't mean that it can't rise 400%. So is that something that you would expect with Jubilant Food?
See, that is always possible, but given that it's rallied all the way from 1650 right up to 1850, 1900, you know, you need to buy it around support. The support is still at about 1650, 1700. If for some reason, you know, budget or what have you, it falls to those levels, that's a good price to buy. From there, with a 100 rupee type of stop, you can expect, you know, levels of 2000 plus. But to buy here, you know, your stop is probably 200, 250 points lower. So wait for a decline. This is the right stock to buy.
Okay, let's move to the next query. It's from Vishal, who's got 2,000 shares of DB Realty. He bought them at a price of 51. He wants to know a long-term view on the stock. What do you say? Now, it was around 20th of December. This stock was trading at around 35, 36. Then the verdict came, and we all know what happened after that. The question is, Mr. Tulsian, if you think that really this has cleared a lot of air, and whether you think that there's a fundamental underlying reason now to be positive on its assets, particularly the Mumbai assets they have?
See, Surabhi, they largely have the presence only in Mumbai, and if you really take a call, they have huge, excellent properties, maybe in Charni Road, Mahalakshmi, Prabhadevi, Bandra Kurla Complex, Bandra East, near Lilavati Hospital, Goregaon, Kandivali, Mira Road, at all the places. And at none of the places they have less than 10 lakh square feet minded for development. Because and this 2G judgment, you know, that has been a big turnaround for the company, and definitely now the things will all be taken up by the promoters, either by entering into the joint venture project. They have already entered with the Radius Group for their Jacob Circle project. They have already entered for their Charni Road project with the Panchsheel Group, and they are now looking to enter into a JV for their Crown Mill, that is at Prabhadevi also. So taking all this into consideration, since this investor is asking for the long-term view, I'll advise him to remain invested. But maybe the stock having run up can see profit booking at some level, whether that happens at 80 or 82 or 84, because investor says that he is a long-term investor as long as stock keeps moving up. So either he should have a clear conviction of holding it for the long term, that is at least for minimum 1 year, or he can look to book profit at 80, 82 and look to enter again at the lower level.
Okay, Mr. Tulsian, thanks as always for joining us. You have a good day. We'll speak to you again soon. For the market, things are looking very good right now. I mean, by very good, I mean that the Nifty may not be getting above that 10,500 mark, but individual stocks are giving you great returns. Even the Nifty, by the way, has moved to the high point. So before I go to our next guest, if Ashwini Gujral is still with us, Ashwini, I just wanted your thoughts on what one should do now. You know, we're virtually at that level of 10,500. If we close above that today, will that give you confidence to take a fresh buy call, or would you still wait a few days?
See, that would lead to short covering, and as we speak, the Bank Nifty is starting to move up. So the Bank Nifty is the only instrument which can take the Nifty above this 10,500 zone. So good chance that by end of the day, you know, we could make a decisive move here. Basically, the level of 10,550 is the Nifty futures level. So the cash level is about 530. So next half an hour could be key for the market.
Okay, let's see if it can indeed climb that wall of worry. It's approaching that 10,500 mark once again. And mid-cap index continues to soar, goes higher and higher. That's the afternoon. Well, speaking of mid-caps and picking the right stocks, good time to bring in our Alpha manager, Rajesh Kothari, Managing Director at Alpha Accurate Advisors, joins in. Rajesh, good afternoon. Good to have you in our studios. You know, the one thing that's been a point of debate, especially last couple of days, is that is it getting a little too much now in the mid-cap market, only going by the quality of stocks? Because we've seen this stampede to try and pick the next RCom, you know, to try and pick the next DB Realty. What are your thoughts on the same?
Well, you are right. You know, when the markets move up like this, you know, in a bull market, the people do create mistakes, So it is a very good chance of suppose somebody is making that kind of a mistake. But if you want to avoid that mistake, that doesn't mean you don't participate into the market, because there are still many good high quality companies which are still trading at a very, very reasonable valuations. So I think it is more about picking the right companies, avoid the what I would say nuisance or the rumors kind of a thing, and stick to the high quality balance sheet.
Oh yes, I think you've been managing to do that pretty well, because you've done what, a 55% compounded annual return on your PMS plan in 1 year. That's while BSE 500 gained about 35% and the Sensex was up almost 28%. So look at those phenomenal returns, 55% in 1 year and almost 28% in 2 years. I want to talk about individual stocks, because there are a couple of names which have given you great returns. Motherson Sumi is one, Maruti Suzuki is the other one, Bharat Forge is the third one. But now these have become well-discovered names. In the auto ancillary space, anything else that is not so well known and perhaps could be the next Motherson Sumi or Maruti Suzuki?
Well, I think the entire auto ancillary space, Sonia, if you look at it, is going through a completely, I would say, transformation zone. There are two things which are changing. One, a lot of automation is happening. Two, a lot of electronics is increasing. So the content per vehicle is going to go up significantly from current levels. So the opportunity is probably 2 to 3 times compared to what is the revenue size of the good auto ancillary companies. Because on one hand, there are regulatory changes. For example, airbags becoming compulsory. For example, LED lamps to be put on, whether it's two-wheeler or four-wheeler. For example, oxygen sensors, which is going to be compulsory 3 years down the line. So there are many regulatory changes happening. There is a lot of automation is happening, and this will lead to significant growth into the companies which are catering to the electronics, I would say, which is a big size, which is a huge component of the industry. So for example, last year we identified Minda Industries and Minda Corp. Of course, we continue to hold Motherson Sumi. So I think these are the companies, and probably a few more like this, which are going to probably continue to deliver strong earnings growth.
So which are the other companies that would be big in the EV space eventually?
I don't think you need to be into EV space. What you need to cater to the electronics. Say for example, if any car, if you look at even the low-end car right now, they are giving more and more electronics to the consumer, correct? Okay. So it means there are more sensors. It means there is a more aesthetics within the car, and all requires either wiring harness or there are a lot of regulatory changes. So it is a combination of these two, and many of these auto ancillary companies, they have the right global joint venture collaborator for technology. So it is a combination of these two which is going to lead to the compounded growth for next 3 to 5 years.
Rajesh, so obviously you're very heavily loaded on auto and auto ancillary. The other big sector that I'm seeing in the list of top performers comes from consumer. So whether it's Siaram Silk, whether it's Raymond, whether it's Asian Granito, Whirlpool, obviously that's also consumer play. Britannia, there's a lot of consumer out there. What I don't see in the top list so far is EPC and construction, and again people are getting excited about stories like NCC, Sadbhav. We keep hearing these names. Managements are sounding pretty excited about the business. What's your view on this? Are you looking to change the construct? Are you looking at a cyclical exposure at all?
See, I think the people are getting bullish on that theme because the government is going to spend huge amount on infrastructure. But we believe that beyond infrastructure there is affordable housing. Where the government is targeting almost 5 crore homes over the next 3 to 5 years, and there is a huge trillions dollars opportunity, and therefore it is better to play through either cement or maybe companies which are into tiles, or maybe companies which are into plywood, because those companies has anyway consumerism within it. Sure. So they are less cyclical in nature. Their balance sheets are much more stronger, and they have a very strong free cash flow. And please keep a note that most of these construction companies are now trading at 20 to 25 times price to earning multiple. And if you look at the tiles and plywood companies are also trading at 25 multiples.
Okay, by the way, the market is now at the day's high. So just in the last 10-15 minutes, the mood has really picked up substantially. The Nifty is now above the 10,500 mark. It's important. It's a technical level that is important for traders, and that has been surpassed on the upside. And the mid caps are just flying away right now. The mid cap index up almost about 1% odd. Rajesh, in this market, we are seeing a couple of themes that are playing out very well. Today, you have the entire steel sector that's doing well. PSU banks are looking very good. Any of these spaces where you don't have a big exposure in either steel or PSU banks, but anything where you would take a fresh call?
I think probably, we are becoming more bullish on the specialty chemical rather than the, like if you look at the global commodities, all global commodities are moving up, correct, because of the Chinese factor. But instead of play on China, on steel, we thought it's better to play through probably specialty chemical, because there is an inherent strength of Indian companies in this segment. So last year, if you look at our portfolio, few of them have already become multi-baggers in last year. So we think that globally, even metal sector may continue to perform because global growth is coming back. But I think you are better off playing the companies which have a sustainable, less cyclical, ROEs, less cyclical business models.
So let me try and drill down further, because specialty chemicals is a very, very specialized play. So are you looking at agrochemical companies? Are you looking more at, the dye and dye intermediaries? What sort of specialty chemicals?
So for example, if you look at our portfolio, we are holding one of the company which is into, amines. Say for example, Balaji Amines, which we are holding. One of the other company which we are holding is Ashai Songwang, which I've been talking when we discussed last time. Similarly, one other company which we identified is Bhanshali Engineering, correct? So there are many companies, is a huge space, as you rightly mentioned, but you need to pick and choose rather than take a generic view to make that kind of returns.
Okay, one last question from my end. A theme that everyone's quite bullish on is the rural theme, and as we head into the budget, of course, this is an annual thing, but in that space, consumer/rural, you have a couple of these plays which you like, names like Britannia, for example, names like Whirlpool that are now increasing their presence in tier 2, tier 3 cities. Is there more money to be made in these names?
Yeah, Sonia, I think these companies will continue to deliver compounded 20 to 30% growth. And also companies like tiles or plywood, you have a benefit of GST, or say for example even for the fabric guys like CRM. So GST is going to move unorganized to organized. And many of these sectors, the organized market share is only 30 to 35%. So I think the opportunity is still huge, but you need to have a long-term view because many of these companies have already moved up. Yeah. So that's the only caution what I would say.
Okay, Rajesh, many thanks for dropping by, and of course a very happy new year to you as well. Good luck for the year 2018.
Wish you happy new year to the entire CNBC team and all viewers as well.
Thank you very much.